Hello everybody and welcome back. Well, if you've been following our channel for the last 2 weeks, you'll know that we've been bringing in some big stats and hard-hitting things that have been helping us to gain clarity in a tough situation. A lot of that's been paying off this week with some nice bullish moves. But have we hit a resistance on the Nasdaq and SP500 that's just too much? Let's take a look at stocks, cryptos and commodities right now. We've got some great data and we've got some great information to go through for the next session. See you soon. Well, welcome back everyone to the daily show where we talk about stocks, cryptos and commodities. This is for the close of the 26th of May 2022. And I thought the best place to start today's video was talking about these bear articles. So on the weekend, we saw huge amounts of bearish articles being written. And of course, what does that mean? Well, it means that the spread of fear was extreme. The last time we saw this at such a really high extreme level was actually March 12th, 2020. About a week later, the stock market and markets around the world bottomed. So what's that telling us? Well, it's saying that the market is always very good at sucking people into a general concept. And let's have a look at some other stats occurring here right now. We've got decent amounts of volume being triggered. That is, net retail buying of US securities has improved, especially in the last couple of sessions. Why so many buyers are coming in? Well, Wall Street has made the decision after the meeting minutes to get involved. We've also got insider buying and purchasing happening, and that's also really fantastic to notice here. If we think about it, last time we saw insiders purchasing like this was the bottom of 2018, 2020, and right now. So it does show that there's a bit of a switch, and who's going to know better than us? Probably the insiders in the actual stocks themselves. By the way, if you haven't already, join our Discord community. The public Discord link's in the description below. I saw a lot of people placing some really great trades in the last 24 hours in the public index community. And of course, if you want to try the private, you can do so. 7-day free trial, links in the description as well. Caution prevails. Bearish options bets on single stocks surge to levels not seen since 2020. Another sign of why we started getting bullish in the last week and a bit on markets. Too many people being bearish, too many bearish articles, too many the end of the world is happening kind of events. Now, it doesn't mean it's not happening. And I know a lot of you people will be bearish out there, and that's absolutely fair enough. It just means that it's due for a rally. When you start to see these types of things occur, it could mean turnarounds are about to come. And that comes back to exactly what really made us believe in this concept. And so far, it's been correct. When we hit 6 weeks down, that was really unusual. Then we hit 7 weeks down. We enter territory that's only been hit 4 other times in history. And usually, if you notice, the next 1 month and 3 month returns tend to be positive. That is, a rally gets bought back up. Now, does that mean that the bear market's over and some kind of recession is over? It doesn't necessarily mean that at all. It just means the market needs to suck more people into an idea, and then we'll find out whether the recession is over and cancelled or whether actually it's real and a new low comes in later. And of course, in midterm election years, never doubt that the market can't come down at another point. Extreme fear. Yep, we've got a 17 reading still, so still very fearful in the market in general, even though trends have changed, but we are at a key resistance. And for the last 24 hours, let's take a look at what happened. It was a broad-based buy, but as we suspected as a community here, it was really tech on. Risk was on for the session. And for anyone that was really looking at the previous 2 videos, I think you would have known that it's coming because we were on top of this one as a community. We did really well there. So Nasdaq was the best performing market. It makes perfect sense. It rallied. The pre-market session had some good setups in it, and it basically just went ballistic all the way up to resistance points that were hit basically mid-session. You can see that with all of these markets hitting very key zones. Now, we're at this resistance, but have sectors started firing? Well, Jets was up 5.14%, XLY, consumer discretionary, 4.9%, and of course, semiconductors, XLK, all of the risk on was all over the place going up, and all of the risk off, utilities, etc. was flat as flat can be. This in turn led to things like the fear index, the VIX dropping again, 27.49. So we probably expect this to hopefully drop a little bit more, but we do need to talk about the US 500 a little bit later because the S&P might look completely different. We've got a support, we've got a level that might be broken, 25, always an important point, 25, 30, 35, each 5-point increment worthwhile looking at on the VIX. PCC, pretty much even with puts and calls, right in the middle zone. As we know, max pain is coming up because we have the Friday options expiration, so we'll need to look at that, but PCC can't really help us too much. Copper, or Dr. Copper as they like to call it, still stuck in the range. It looked a little bit dicey there, but copper switched, looking a little bit more positive. That's good. And at this stage, sitting in a nice level. US 10-year. Now, we hope this comes down. Obviously, we want the US 10-year to come down to alleviate some of the inflation fears, to alleviate what the Fed has to do. And by the stock market coming down, it's really helping the Fed's supply-demand problem. Remember, the Fed can't deal with supply. That's up to China to really deal with the whole COVID stuff over there. But the next thing is US 10-year. Can we get a drop in it? And at this stage, we've been calling it since up here as a community. The market has moved down. It's now at a point of support, and I'd like to see that get breached and really see this 10-year start dropping away to where I think and hope it can get to, back into the low twos. 2-year also dropping nicely here, back to 2.47, and that's led to, of course, the treasury yields, that is TLT, looking like one of the better kind of trades recently in terms of Sharpe ratio. Certainly the risk to reward has been okay, and I'm hoping the treasury can get back to around that 122 level fairly soon. We've talked about this many times. Go back and watch our other content. You'll see the last couple of days we've spoken about that a lot. The US dollar. Now, we weren't trapped, thank goodness. I mean, if we were trapped, a lot of people did get trapped up here. Remember the spread of the idea. Everybody was talking about how great cash was up here. We hit a monstrous resistance on the daily, weekly time frame for the DXY here, the US dollar index, and then it breached through, false, moved underneath, and at this point we were pretty damn confident the dollar was rotating out. When that happened, where's money going? Bonds, equities, those types of investments. So the US dollar weakening here a little bit. Obviously that means risk on around the world, because this is the safe haven. Remember, the US dollar is the major. That's why we look at it. At this stage, still looks pretty weak. It's come down to a bit of a trough. It's already done a bit of a pullback, swept these orders here. Didn't quite get back to the 103, which we were hoping for, but still very weak. And the new trend is down for now for the dollar. Let's move over to gold. So gold has done very well for us as well in the last couple of weeks. We've picked up some amazing levels, and we've been speaking about this level now for the last couple of sessions. I'd love to see it breach this zone. So right around here, we have the 1856.21. If we go above that, then what are we doing? Well, we're putting in a double bottom in the direction of trend. I love those types of positions. So that would be very strong here for gold. Hasn't done it yet, but certainly trying its best to get up there. And that could spell for a new peak past 1870 for gold. So watch this. It's going to be very susceptible, of course, to things like the dollar index as well. But at this stage, if the dollar index goes down, expect gold to hopefully turn. And the big heavy support here at the moment is 1840. If it breaches under that, bad things could happen. And back down, I think we go to maybe even the 1820s at that stage. Natural gas keeps struggling. Now, I'm not a huge fan of the natural gas trade at the moment. They call it the widowmaker for a reason. Super risky position. You know, it's very, very bad. This is a tweezer. Usually it spells disaster for kind of trades. Obviously, if you're a bull on natural gas, if it cleans above this zone, it's quite a strong kind of position. It shows that it's putting the squeeze on all the shorters. But if we get a new low underneath here, expect for shorting to come back in on natural gas. And just be careful here of this trade. It's not easy right now with the geopolitical, everything else that's going on. We also saw that there's been some changes in the world on oil. Now, oil's back to the resistance or right around it. It's dealing with this level. I'm not won over by the oil trade. I know it was up again on the last 24 hours, but be careful around this resistance. This is no joke, this level. So again, very high resistance, big level of supply. I'm not convinced that oil really wants to move up. It's been in a monster hold pattern, and I could see a lot of traps happening here on the longer term. Remember, oil, my opinion here is for multi-months, not necessarily the next 2 days or anything like that. Let's move over now to XLY, XLP, and we'll begin the story of the stocks. So we've been looking at this because it shows us risk on and risk off in the markets. It's one of my lead indicators to show me that things were turning around, and we took a deep dive into it in the previous session to talk about risk coming back on. Now, it looks like it could be a double bottom. Have we breached? No. Does the current market show us that there is some strength in the market? Sure, absolutely. I would like to see it take this zone out and then pull back, and then, of course, allow us to say, okay, risk is finally on, because it hasn't been on really. There's been no risk taken in the market since back in the 15th, 16th of March, when that last time the Nasdaq and all of the other tech stocks started firing. So this super critical point, we're looking at it very closely, and we'll continue to, of course, watch that story. Let's have a look at Tesla. So Tesla did a good session, finally, first time in a while. What did it do? Well, it breached the zone we spoke about in the last 24 hours. Big area, and it put in a first time frame change of trend. So that's very important. We basically breached this area, first time frame change of trend. There could still be pullbacks. We're at a bit of a point of role reversal or a shorting area that could come in for Tesla. But I think that there's some buyers here now. So like something like a 665 could be a good level to watch in the next 24 hours if we get pullback. And I think there are going to be some buyers coming back into Tesla on the short-term timeframes. We've breached a bit of a downward trend here as well. So if we think about it, here's the market. Here's the little bit of the downward trend, series of lower highs. I would love to see it take this out. Once it takes that out, I get even more confidence. So this certainly much better for Tesla and risk on in general. So not too bad in the last 24 hours. Another one that moved quite nicely was Apple. Very similar. You've got your last low. Obviously, you've got some swings in there. This is a huge level coming up. We've talked about it. And it put a low in that basically was equal with the other one in the last session. It then rallied to make a new high, which is pretty damn good. So it looks like it can set up. We know where there's demand. The demand's sitting just behind this level down here. So we know there's a defended level around that 137.60. That seems to be a pretty key zone. And then we also know that it's trying to flag here the last couple of hours of trade. So where's the next target for a lot of people? I think it's going to be somewhere around that just underneath 150 area for Apple. And if the Nasdaq breaks out, which we'll check out in a second, that's the next level that could really be opened up here from an Apple perspective. Let's move over to the Dow and the major indices. So Dow hits resistance, and all the indices hit resistance actually. Look at that, slams straight into the zone top that we talked about. This is where you expect shorters to try to come back into the market. Remember, on a daily and 4-hour time frame, we're still in a downward trend. I mean, don't get me wrong. Yes, okay, everyone was super negative down here. And yes, the lower time frame trends have changed, but the daily is still in a down trend. So if we think about the Dow, point critical is where it is right now, 32 770, 780, that kind of area. A break above that's significant, very big deal. But this is why it's turning around here, and this is why weakness is coming back into the market. It's hit a resistance that we've spoken about now for the last couple of sessions. The DAX also at resistance. If you're not sure what the DAX is, it's the German 30 index, or German 40, index, and got caught with the Dow there. But the German 40 index, so the top 40 stocks, and you can see the resistance again, very, very high, big level, series of higher lows, pretty big deal, and we can tell why shorters might come in. Also, IWM closes on the resistance. Again, why would shorters come in? Well, we're at a big point. This is where they're going to try to fight the stand. This is where the shorters come back in and say, hey, you know what? We want to take the market down. We know it's still in a downward trend. And it brings us back to the Nasdaq. The Nasdaq, if you think about this downward trend here, just hit resistance. Do we have a gap close that could be potential here? Yes, and I'm hoping that does occur. But you can kind of tell why the market might find some problems, come back down a little bit, possibly even come back to the 12,000, and then bounce off that zone, ideally breaching past this level. So in the next 24 hours, I think a lot's going to happen. At this stage, I wouldn't be surprised at all if we come in a little bit red into the market session. Seems probable, doesn't necessarily have to happen, but it seems probable that we might form a base. And you're looking for really that base formation on your day trading and scalping and even swing trading, because once you see that and you know it's based, whether it bases down here or it bases before and starts moving back up, once it breaches here, what's it going to do? It's going to try to fill the gap zone, which sits in this area here, 12,500 being the next big resistance for the Nasdaq. But the Nasdaq's super behind the rest of them. So let's have a look at the SP500. Notice it hits that exact perfect level we talked about, just underneath 40.80. It's what we've spoken about all week being a big critical point. So let's look at the trade and see what happened. Well, it hit it. It filled the gap. There's the gap. This one filled. Now, SPY is better in terms of analysis, that is the SP 500, than the Nasdaq. The Nasdaq has been weak. The Nasdaq gives you sometimes false signals. The SPY is the true one. So when we look at this, okay, where is some big volume profile? Well, we've got some areas right around that 400. Look at that level. Damn, that's big zone. So there's a lot of stuff going on in this 400. So where might we see some structure? Potentially the 400. That could be a pretty key level. We look at the US 500 futures. Again, very critical zone. You can see where it bought off yesterday. And we might even wipe this on the Friday close. I wouldn't be surprised. It is quite possible. Or we go down a bit and then we look for a turnaround. So there's a lot of structural issues. There's a lot of resistance here. Bulls are looking to get past this point to feel incredibly confident about the next moves, to bring that double bottom in. Remember, if we go back over the S&P 500, what this is forming is effectively a beautiful base that we can then say, okay, cool, decision made on the high time frames. The market is trying to go back up, and that opens up 4,300 as a next big rally zone. So there's a lot at risk here for the S&P 500 in the next kind of sessions. You can see where the bulls are, and I totally get why the bears are trying to short this area all the way down, because that's the zone that they first come in, and then the bears are going to sit around here as well. And I wouldn't be surprised if they're sitting there very excitedly. Let's have a look at the options expiration for the Friday. So maximum pain would sit around 397. You can see the stock price is 405 here on the SPY. So again, points towards a little bit of pullback, possibly close around that zone. You don't know what's going to happen, but it does help explain the concept if it does start to occur. So watch that one. And with Bitcoin, look, this market has been very, very sick. I mean, it just swept the lows. So this is the support we've talked about for a while, and it swept it and purchased off. Wow, that's a pretty big move considering what's happening in the other markets. So that sweep is not good. The series of lower highs is not good. Look for a breach above those. I'm not won over, and I've said this a few times, by Bitcoin movements at the moment. I don't like it. 32,000, you have me, and you've got my attention. That's where that big supply sits that I'm interested in. This is all very, very, very fast, nimble trading if you're going to do it. And I don't really like it. And at this stage, it still looks very, very weak. So be careful here in the crypto market. Something strange is afoot, and it looks like crypto winter to me, which we've been talking about for a little while. Also, if you haven't already, come and follow us at FX Evolution on Twitter. Does help us out. Definitely come join us. We share a whole bunch of things. Discord community again, guys. Links down below. And remember, we have our next figure, Core PCE Price Index, 8:30 a.m. New York time, which is going to be a fantastic bit of information, because at least then we'll see maybe some more movements off it. Prelim GDP, negative 1.5%. Look, we expect it to be good? No, it was going to be a horror show. It is. The market doesn't care anyway. That's why sometimes when you're interpreting this news, you can't understand it, because the market's already sold off heavily. So when a bad bit of news comes out, it may have already priced that in. Maybe it was pricing in worse. How do you know? That's why we follow the price action. We follow the movements in the market, and we obviously don't have an opinion. We instead bring the opinion back to what's the market actually telling us. And right now, it's at a resistance, and this is, the war between the bulls and the bears. Thanks very much for watching. Subscribe if you enjoyed the content, and of course, give us a like. We'll see you in the next one, and yeah, have a great trading session. Have a great weekend, everybody. Bye for now.